This Saturday, May 3rd, Australians will head to the polls for the federal election, held once every 3 years. This time, the election is fiercely contested, with housing policy emerging as the central battleground for both major parties. Each side is going all out, offering attractive incentives to win your vote. Labour is focusing on helping people buy a home, while the Liberal Party is promoting support to pay off a mortgage. At first glance, both sound appealing. But which one truly benefits you more? In this video, we'll break down each party's policy from different angles to help you understand what's really on the table. No matter who comes out on top, both parties are making it clear. They want more Australians to own their own homes. They are trying to manage demand while increasing supply, but according to property experts, both of their proposals may unintentionally push property prices up by as much as 15%. So why is that happening? And who's going to benefit the most from these changes? More importantly, how can property investors protect themselves and their portfolios in this uncertain market? Hello, I'm Alison from Australia. My channel focuses on life in Australia, financial management, and property investments. I am one of the very few real estate agents in Australia who also holds qualifications as an accountant and a lawyer. My team and I aim to help you build high-return and legally tax-efficient investment portfolios that fully protect your assets. I am also the author of Buying Property in Australia for Financial Freedom. The following content is purely my personal opinion and should not be construed as investment advice. If you would like to schedule a one-on-one consultation with us, please visit the website investwithalison.com in the information box above and select a suitable time for your appointment. Australian property prices continue to rise rapidly. According to Domain's March property report, Adelaide has joined Sydney, Melbourne, Brisbane, and Canberra in the exclusive $1 Million Club, with average property prices exceeding $1 million. Dr. Nicola Powell, head of research at Domain, pointed out that while supply remains relatively high in cities like Adelaide, Brisbane, and Perth, it hasn't slowed down national price growth at all. For everyday Australians, especially first-home buyers, the market has become increasingly difficult to enter. Even saving for a deposit takes years. No wonder both parties are zeroing in on housing as a vote winner. A recent YouGov poll, April 17th, shows Labour leading 53% to 47%, their largest lead in 18 months. Among voters aged 18 to 34, support for Labour surges to 59%, indicating that first-home policies are resonating deeply with young Australians. Meanwhile, the Liberal Party continues to hold strong among small business owners, property investors, and existing homeowners. This election is shaping up to be a showdown over who can offer the better housing solution. Our team has created a clear side-by-side comparison of the two parties' housing policies to help you understand which one fits your needs best. Labour's boldest move? A low deposit revolution. Under their plan, first home buyers will only need a 5% deposit, with the government guaranteeing the remaining 15%. This effectively allows banks to offer a 95% mortgage, significantly cutting down the time young buyers need to save. In addition, Labour plans to invest $10 billion to build 100,000 affordable homes over the next 8 years, aiming for 1.2 million new homes nationwide by 2029. They've also scrapped income caps, so whether you earn $50,000 or $500,000, everyone qualifies. And just like the Liberals, Labour plans to ban foreign investors from purchasing existing homes for 2 years. As the Prime Minister said, owning a home to live in should not be a privilege for the lucky few. While that message may sound inspiring, the fine print reveals many practical challenges. The Liberal Party is taking a different route, offering tax relief. Their headline proposal is a 5-year tax deduction on mortgage interest. The average household could save over $11,000 per year, or $55,000 over 5 years. This plan clearly targets those who already have savings and are ready to commit to a mortgage. The Liberals also propose a $5 billion infrastructure fund to support the construction of 500,000 new homes, along with cutting annual immigration and banning foreign property buyers, aiming to control demand and help locals break into the market. The proposed housing policies not only allow Australians to withdraw up to $50,000 from their superannuation to purchase a property, but also aim to lower the mortgage stress test threshold. Peter Dutton has stated that he wants to help young Australians reclaim the dream of home ownership, He frequently hears from young people that despite working hard and earning money, they still can't afford to buy a home, and many don't see how they ever will. He says these stories are heartbreaking. While both parties' slogans sound appealing on the surface, the reality is more complicated. In fact, both Labour and the Liberal Party's housing policies contain significant pitfalls. Let's take a closer look. Although both parties appear well-intentioned and have received substantial media coverage, expert and academic analyses reveal that these policies are essentially forms of vote-winning sugar hits, short-term handouts that stimulate demand without addressing the core issue, supply. In the long run, these measures are likely to push property prices even higher, ultimately making it more difficult for first-home buyers to enter the market. Many could become collateral damage in a system meant to help them. Labour's policy, while seemingly generous, has been described as wrapping subprime lending in candy. Allowing first-home buyers to put down just a 5% deposit certainly lowers the entry barrier. For instance, with the median apartment price at $673,000 Australian dollars, a buyer would only need around $33,000 to enter the market, and they would also avoid paying lender's mortgage insurance, LMI, which typically costs about $23,000. The scheme has become significantly more expansive, from an annual cap of 35,000 places to unlimited availability. The income cap has been removed entirely, meaning even high-income earners are eligible. Moreover, the price cap for Sydney properties has been lifted from $900,000 Australian dollars to $1.5 million. At first glance, this might seem generous, but the word unlimited is cause for concern. It means high-income earners will now compete with low-income earners for the same properties. Developers and sellers, seeing increased demand from wealthier buyers, are likely to raise prices, particularly for properties that sit just under the new price thresholds. In this case, while first-home buyers might save on the initial deposit, they'll end up paying significantly more over time. A 95% loan-to-value mortgage carries enormous repayment pressure. For example, on a $1 million Australian dollar property, a 5% deposit means the buyer would need to borrow $950,000. This translates to monthly repayments of around $5,700, possibly an entire paycheck for some. What's more concerning is the risk of negative equity. With such high leverage, any interest rate rise or dip in property prices could push buyers underwater. That's why I often advise my clients against borrowing to the absolute maximum. Adding to the challenge, experts believe that due to global trade tensions and tariffs, Australia's construction costs will remain elevated. So even though Labour has promised to build 100,000 new homes, it may be difficult to deliver, especially when rising construction costs limit the ability to scale supply to meet demand. On the other hand, the Liberal Party's housing proposal, offering tax deductions on mortgage interest for newly built homes, also has its drawbacks. While this deductible mortgage policy could help new buyers save up $11,000 per year for the first 5 years, it's limited to newly constructed homes, which are in shorter supply than existing ones. Because of this limited supply, developers may again take advantage of the situation and increase prices. Once the 5-year tax benefit expires, buyers could face significantly higher mortgage repayments, resulting in financial strain. So who actually benefits from these policies? According to the Australian Financial Review, regardless of which party wins, both sets of policies are expected to inflate property prices by up to 15%. Many economists are warning that despite being pitched as assistance for first-home buyers, these initiatives may end up making home ownership even more unattainable. Louis Christopher, Managing Director of SQM Research, estimates that home prices could rise 8% to 15% within the first 12 months of policy implementation. He notes that Labour's plan may have an even stronger inflationary effect on the property market than the Liberal proposal. Urban planning lecturer Liam Davies from RMIT University highlights that the two policies target different demographics. Labour's is for those without savings, while the Liberal plan appeals to those who already have some capital saved. However, both major parties' housing policies suffer from a fundamental flaw: an over-reliance on new housing developments. These policies, rather than addressing the issue of affordability, merely improve accessibility, making it easier for first home buyers to borrow, but not to sustainably own. This ultimately risks putting them in financially precarious situations. Hal Paulson from the City Futures Research Centre at UNSW points out that while Labour's housing policy might have some positive impact on overall housing prices, it fails to meaningfully address the lack of housing supply. For first-home buyers who manage to purchase one of the 100,000 affordable homes promised by the government, the cost would be 20 to 25% lower than comparable private developments. However, securing one of these homes will likely be extremely competitive. Labour has pledged to build 100,000 affordable homes over 8 years, yet, according to data from the Australian Bureau of Statistics, there were already 117,000 first-home buyers in the market last year alone. During the COVID-19 pandemic, that figure peaked at 162,000 in a single year. Demand over the next 8 years is projected to exceed 800,000, rendering the promise of 100,000 new homes severely inadequate. There are too many buyers and too few homes. For first-home buyers, the policies feel like a sugar-coated poison pill. Labour's 5% deposit scheme does lower the barrier to entry, but with no restrictions on income or the number of applicants, demand is likely to spike, driving prices even higher. If interest rates rise or housing prices fall, these heavily leveraged buyers could easily fall into negative equity. The Liberal Party's policy, which offers tax deductions on mortgage interest for the first 5 years of owner-occupier homes, is indeed appealing. However, it is limited strictly to new builds, potentially steering first-home buyers into the pricing traps set by developers. With the rising costs of construction, fueled by ongoing tariff wars, what should be affordable housing may end up priced like luxury homes. Regardless of which party comes into power, the Australian housing market is entering a new cycle. In the short term, these policy honeymoon periods, when combined with anticipated interest rate cuts, could drive prices upward through 2025. According to the Australian Financial Review, both policies could inflate housing prices by as much as 15%. In the medium term, persistently high construction costs and labour shortages could further exacerbate supply shortfalls. By 2029, Australia is projected to face a nationwide housing shortage of 400,000 dwellings, which would place even more upward pressure on prices. In the end, regardless of which political party wins, it's clear that existing homeowners and property developers will be the biggest beneficiaries, while first home buyers and renters will bear the brunt. Therefore, before jumping into the market based on attractive policy incentives, buyers must rationally assess their financial capacity. It's crucial not to be blinded by short-term sugar and to truly understand whether home ownership is financially feasible. If anyone is interested in investment or has questions, feel free to leave a comment below to interact with me. If you'd like to schedule a one-on-one consultation with me, feel free to WhatsApp or email me, or you can visit my website investwithalison.com to book a time to talk with me. Thank you very much for your time. See you next time. Bye-bye.